Okay. So, Peter Klein, if you're not familiar with him, here is a professor of entrepreneurship at Baylor University. He is also the Carl Menger Research Fellow at the Mises Institute. He's the author of The Capitalist and the Entrepreneur, as well as Organizing Entrepreneurial Judgment, both fantastic books I recommend you read. Dr. Klein, you have the floor.
Hi there, everybody. It's great to be with you here. I enjoyed listening to Walter Block's presentation on YouTube. And, in light of Walter's remarks, I've decided to throw out everything I was planning to say and instead give you the full Austrian analysis of the implications of complexity and chaos theory for Mises human action. So, okay, well, no, I guess I won't do that, but maybe that issue will come up in the Q&A because that would be fun. Really, what I'm planning to do, and by the way, I don't know if all of you participants, if you've got, in addition to the schedule, if you've got our proposed topics circulated in advance, but what I want to do is something a little bit different from what Walter did. So Walter gave a great kind of overview presentation on sort of fundamentals of Austrian economics, touching on utility theory and praxeology and competition and so forth. I want to do something a little bit different and a little bit kind of actually countercultural. Okay, so most of you on this call, I imagine, are pretty hardcore Austrian economics enthusiasts, and so you've read quite a lot. You're very well informed about basic, sort of core Austrian doctrines. But I want to challenge you a little bit and talk about something that is usually not considered part of Austrian economics. Indeed, something that many people think is sort of in tension with Austrian economics, and that is the analysis of authority and hierarchy. So I'm actually going to give you a little brief talk on on Austrian economics and hierarchy. Sorry, I'm actually monitoring the chat myself here. Is there an audio issue? Some of you seem to be having some. Are you getting a feedback or just low quality audio? Somebody want to fill me
It
in?
sounds like there might be a fan going on in the background or something.
Okay, yeah, let me try. So there's nothing. There's not, but it may be some kind of interference. Hold on just a second. Let me just check my audio settings.
Okay.
Give me just 1 second, guys. All right. Okay, how about now? Any different?
Sounds about the same.
Yeah, so I do have my mic plugged in all the way. I have a pretty high quality mic and headset combo, so I don't really know what could be going on. But if you can hear okay and you can make any adjustments ex post for the recording, I'll just go on. Is that okay? Yeah, okay, good.
Yep.
I'm going to go ahead.
Should be fine.
Yeah, I wonder what that could be because, I wish I had a fan running in the background right now. That would be nice. It could be a hardware issue. But anyway, why do I want to talk to you about hierarchy? Well, I have a book that's in production now with one of my regular co-authors, Nikolai Foss, on management, and it's a book that's aimed at sort of a lay audience of business people, managers, entrepreneurs, and it's called Why Managers Matter: The Perils of the Bossless Company. And that'll be published sometime later this year by Public Affairs, which is one of the imprints of the Hachette Group. And whenever I talk about this book, I get a lot of questions from people about what we're trying to say and why we're trying to say it. The book is essentially a defense of the traditional managerial hierarchy and a critique of the very popular notion, popular in many circles, but in Austrian circles as well, that all companies, all organizations, all groups need to be radically decentralized, totally flat. You get rid of all the middle managers and you minimize the role of the top managers. You make sort of everyone a boss, you make everyone a boss, and everyone cooperates sort of in a totally horizontal kind of peer-to-peer fashion. It's, in a way, it sounds like socialism, right? But I think what a lot of people have in mind is a kind of voluntary, peer-to-peer, sort of spontaneous order means of organizing production. And so we're critiquing that and explaining why we think there is a role for authority and hierarchy in the modern economy, in the knowledge-based economy, yada, yada, yada. And we sort of lay out that argument in detail, as well as offer critique of what we call the sort of bossless company narrative, which is this idea that all companies ought to be organized in this radically flat way. It just so happens I've also written a paper that will be coming out hopefully in another month or two, along with Per Byland and Mark Packard, who many of you know, for a new journal that's called the Journal of Business Venturing Design. It's a management journal, an entrepreneurship journal. It's a spin-off of the Journal of Business Venturing, which is one of the most top established entrepreneurship journals. And it's really about the concept of design and how entrepreneurs and managers and other people can understand basic principles of design and apply them to organizations and projects. And so we wrote an article on an Austrian approach to design. And a lot of people think that's inherently contradictory, because they say, isn't Austrian economics about undesigned order, about Hayekian spontaneous order? Isn't the idea of design, deliberate top-down design, fundamentally in tension with Austrian economics? And we think the answer is no. And I'll draw on some ideas from that paper with Per and Mark as well. So what is this, what is the idea of bossless companies or radically flat companies? Well, you hear a lot of statements by entrepreneurs and by professors and journalists and sort of management gurus like Gary Hamel, who's one of the most famous management business writers of the last couple of decades. He wrote a famous article saying, the best way to improve business is to get rid of managers. We need to fire all the managers and get rid of all the overhead, all the waste that goes into meetings and writing memos and supervising. Tim Castell, who's a management expert in Australia, said in a 2013 Harvard Business Review paper, it's time to start reimagining management. Making everyone a chief is a good place to start. So make everyone a boss, make people work in peer-to-peer kinds of networks, get rid of the hierarchy, and we'll all do better. Many of you are probably familiar with companies like Valve, the famous video game, originally sort of video game platform or video game designer, really now more of a platform. Valve is very famous for embracing a model of management called holacracy. And the proponents of holacracy explicitly invoke Hayek and other Austrian thinkers as they defend and describe sort of the model they have in mind. The online retailer Zappos, which is now a subsidiary of Amazon, was another famous proponent of this radically flat kind of business model. I'll tell you a little bit more about the model in a minute. The basic argument we make in the book is that, first of all, the argument that in some cases it makes sense to flatten the hierarchy is true, but almost sort of trivially true. And it's not a new argument. That's something we've known forever. The kind of arguments and the evidence that you hear in favor of the sort of bossless company idea, the evidence is pretty weak, and there are a few sort of cherry-picked poster cases like Valve and some older companies too that are really the exceptions that prove the rule. Third, what we often see as examples of bossless organization really are not bossless when you look at them closely. In fact, they often have very strong bosses, and they have very, very strong hierarchies, but often dysfunctional hierarchies that are dysfunctional precisely because they explicitly claim that, we're all just equals here. There's really no lines of authority. We're all just friends sort of working together. That ends up leading to the sort of high school, clique model where there's an in crowd and an out crowd, and there's the cool kids and the not cool kids. And the cool kids end up basically running the show, but without any explicit rules or procedures or any transparency about how things are going. So they actually end up worse off than companies that have a more explicit kind of a hierarchy. So again, when I make these arguments to my business school colleagues, I usually get some favorable responses and of course some questions and challenges and so forth. But when I discuss this, in Austrian circles or in libertarian circles, I often get a sort of horrified reaction. Don't we all know that Wikipedia is way better than the Encyclopedia Britannica because Wikipedia is bottom up and the Britannica is top down? didn't Hayek and others teach us that the marvel of the market is precisely the lack of top-down central planning? Haven't we learned from companies like, Koch Industries that market-based management is better than traditional hierarchical management? The answer is no. None of those things is correct. Okay, so Austrian economists certainly have talked about bottom-up organization and decentralization and spontaneous order. That is not, as I've argued many times, sort of the core of Austrian economics, which is rather the study, as Mises puts it, of purposeful human action, how entrepreneurs organize production by arranging resources that have lots of different attributes and so forth under conditions of radical uncertainty to try to produce goods and services that consumers will want to buy. That really what Mises means by the market process is not some sort of decentralized bottom-up spontaneous order, but rather the process of entrepreneurs competing against each other to find better ways to organize production, better ways that often include a lot of top-down authority, right? Better ways of organizing hierarchies. It's the process of entrepreneurs competing against each other for designing and operating business companies, business firms, i.e. business hierarchies. That is the essence of that's what the market is all about. That's what we do in the market. It's obvious even if you look at Hayek's famous 1945 article, The Use of Knowledge in Society, Hayek emphasizes quite strongly in that article, right, that when he and others criticize the concept of planning, they don't mean planning per se. What they mean is planning by the state, right? Planning in a society in which, to use Mises' term, there is one will acting. There is one central planner or central planning board in charge of directing production. That is what that's what the Austrians, that's what Mises and Hayek objected to. Not planning by individuals, not planning by private groups, not planning by companies at all. In fact, here's the money quote from Use of Knowledge in Society. Hayek says, quote, "In ordinary language, we describe by the word planning the complex of interrelated decisions about the allocation of our available resources. All economic activity is in this sense planning." Did you catch that? All economic activity is in this sense planning. This, by which Hayek means the socialist calculation debate, this is not a dispute about whether planning is to be done or not. It is a dispute as to whether planning is to be done centrally by one authority for the whole economic system, or is to be divided among many individuals or groups. Right? A business firm and a private market economy, after all, is a group of individuals who have gotten together to work collectively, right? There's that word, collectivism, to work collectively to further some particular goal. So I think Walter has written about this too, although he didn't mention it in his talk. Walter points out that, if what we mean by collectivism or what we mean by a collective is a group of people who get together deliberately and purposefully to accomplish some goal, well, then a market economy is full of collectives. And market, organization by the market and collectivism defined in that way are 100% compatible. Right? The collectivism that Austrian economics opposes is where the state operates as a single collective, on behalf of the entire economy. So the terms like authority and hierarchy are often associated with coercion, right? Again, if by coercion we mean the state or even private actors, right? Initiating physical violence or force against other actors, right? That is, that kind of behavior in Austrian economics, in Austrian terminology, cannot increase overall societal well-being, right? Involuntary decision-making through the principles of demonstrated preference. Walter touched on this a little bit. Right, we cannot say scientifically that you are better off when you are coerced into taking an action that you would otherwise not have taken. However, right, if you voluntarily agree to sign a particular contract, right, if you get together with another party and you say, okay, I'll sign this contract which states that for the duration of the contract, until one or the other of us terminates this contract, I agree that I will show up every morning at a particular place and I will perform a set of tasks. The exact tasks are not specified ex ante, but will be determined by you on the day that I show up. Right? Within some particular range, I will agree to perform the tasks that you assign to me in a top-down manner, in exchange for which you will pay me a certain amount of money per week, per day. Maybe it's a piece rate contract where you pay me according to some specific outputs that I produce. But essentially, I agree to subordinate my authority to yours, or under specified conditions for a specified duration in exchange for some remuneration. What is that? That's an employment contract, right? And voluntary employment contracts are perfectly consistent with organizing activities through the free market. All right. So if you want to use the term, it's not necessarily the best term, but Ronald Coase popularized in his famous article in The Theory of the Firm a quote that he got from another economist, which says the business firm can be understood as an island of socialism, competing against other firms in the sea of the market. It's not a great term because a great phrase because the term socialism is, of course, sort of shot through with a particular meaning that we understand, we associate with political socialism, right? But if all we mean by socialism, again, is a group of people that get together to achieve a sort of a shared goal, and they do it through a private voluntary business company, well, then, yeah, then we do have that kind of socialism in the free market, right? And again, the key there is, do we have competition among these organizations, among these firms, among these companies? If we do, and people are free to join these organizations and to exit these organizations, then of course all of that, that kind of socialism is 100% compatible with the free market. And of course, that's exactly what we analyze when we apply Austrian economics to analyze production and exchange and so forth. Okay. So, why is it worth making these points? Well, again, we live in an era, even outside the conversation we're having here, right, in which, well, really since the 1960s, right, where there's an emphasis on personal autonomy and empowerment and, sort of doing your own thing. And more recently, within the last decade or so, thanks to the internet primarily, and, cheap and ubiquitous wireless communication, digital technologies, we do have a lot of goods and services that are produced on decentralized networks and platforms, like Wikipedia, right? We have a lot of, bottom-up peer production. We do a lot of, we can crowdsource a lot of decision-making. We can crowdsource the provision of capital through crowdfunding platforms, for producing goods and services. We rely a lot on user-generated content rather than content that's generated top-down by an authoritative body. People used to read the newspaper. Now they go into social media and, get their content that's sort of produced by the crowd. You even have seen in the last couple of years attempts by historians and philosophers to claim that anything other than radical, decentralized, bottom-up production is inherently somehow sort of morally suspect. There's an influential book by the historian Caitlin Rosenthal called Accounting for Slavery, in which she argues that a lot of practices, this sort of modern conventional accounting practices, essentially emerged from sort of monitoring technologies that were designed during the U.S. antebellum slavery period. Ways of increasing production and accounting for what went on the plantation, and that those techniques developed in the antebellum South on slave plantations have sort of found their way into Microsoft Excel and the basic sort of management methods that almost all companies use today. The philosopher Elizabeth Anderson, who's a very good philosopher, David Gordon has a very high opinion of her as a philosopher. She had a recent book called Private Government, where she argues that the corporation is essentially acting as a private company, that private corporations are essentially acting as government entities, and should be treated as such. You find this from a lot of critics of big tech on the right as well as the left. That Facebook and Twitter and Amazon are basically like the state, so we ought to regulate them like the state or break them up like the state. So, from sort of all corners of the political spectrum, it's very fashionable to sort of dump on big companies and giant corporations and say that they're harming us in various ways. So, what's the correct way to look at this? I look forward to having some conversation about this in the next couple of minutes. But here's the basic argument of our book. Number one, bosses really are important. Bosses matter. Management matters. And hence getting rid of bosses may actually end up counterproductive. It may be harmful to the goal of, economic well-being. Even in our modern network, knowledge-based, information-based economy, the so-called new economy or whatever, the basic management problems of coordination and cooperation are still in place, right? So we still need to figure out ways to coordinate people and tasks. Sometimes that can be done through the price mechanism, right, between individuals and between firms, but often it is effectively done inside organizations, i.e. by entrepreneurs and managers within the firm, right? That's not a new idea, right? All organizations for hundreds of years, right, have incorporated some degree of decentralization. To use the language of my former professor Oliver Williamson, all organizations, represent a blend of market and hierarchy. So there's coordination by management, and there's sort of spontaneous coordination through the market, each of which has advantages and disadvantages which vary with the particular circumstances in question. Really, what makes a good boss or a good manager, a good entrepreneur, is the ability to tell the difference, right? To know when sort of top-down intervention, again, on a voluntary basis, is warranted, and when delegating, decentralizing, and so forth make more sense. So, why doesn't radical decentralization work all the time? And the answer is it doesn't work all the time because some activities, some tasks, some processes involve what we might call interdependencies, right? So what one person is doing has an effect on what other people are doing. Think of the assembly line, Henry Ford's assembly line, or Adam Smith's famous pin factory, right? That's a circumstance in which the specific tasks, Adam Smith talks about drawing out the wire and cutting the wire, straightening the wire, putting the little head on the end of the pin, and so forth, right? Adam Smith's point was that you can produce a lot more pins, and you can produce pins more effectively when you have a group of people producing a whole bunch of them at the same time, right? So rather than one individual worker do all of those stages for each pin, you have one worker does all the straightening, and one worker does all the cutting, and one worker does all the putting the heads on and so forth in an assembly line. But by subdividing the tasks in such a way that each person performs the same task repetitively, you get more and better output than you would if each person performs every task. Now, critical to Adam Smith's story is that process was taking place inside the factory, right? So the entrepreneur's job was to figure out a way of coordinating those tasks to increase productivity, right? There's a division of labor inside the organization, just like there is between organizations and between individuals. What the entrepreneur is essentially doing is creating a better, a stronger, a deeper, a thicker, a more efficient kind of division of labor to take advantage of these interdependencies across tasks and across workers. So a lot of the examples that are often given in the literature, companies like Valve and Zappos and so forth, of companies that seem to have succeeded with a very radical, decentralized structure, are companies that produce things that don't involve a lot of interdependencies. Okay, so they produce, in the case of Valve, software products that are mostly independent and highly modular, right? Companies like Zappos, which are selling shoes, right, use very basic technology, things that are very easily codifiable, things that are easily routinized, and where there are very few interdependencies across people and tasks. Now, one of the points we do make in the book is that authority can be thought of in different ways. right? What we call type 1 authority is the old-fashioned sort of command and control. The boss tells the worker what to do and the worker does it. There are a few cases where that kind of command and control style authority might make sense, right, in a modern economy. Not many cases, but there are a few, right? Again, sometimes interdependencies can be better managed. Things can be better coordinated with sort of top-down decision making. There may be cases where speed is more important to get something done quickly than to get something done the best way, most correctly, and therefore it makes sense to have someone someone at the top of the pyramid give the orders, have those orders carried out, even though a subordinate may have had some sort of Hayekian specific knowledge that could have been useful for doing something different, but there just wasn't time for that knowledge to percolate through the system. There are other cases where specific people perform multiple tasks and so forth. Again, we're not claiming that there's anything coercive going on, right? All of this is taking place, we're assuming, under conditions of voluntary labor market contracting. But the way in which authority most often manifests itself in our economy is through what we call type 2 authority, which is not command and control. Rather, type 2 authority consists of designing and enforcing the rules of the game, right? Establishing procedures and processes, assigning individuals to roles and tasks, resolving disputes as they come up, deciding who's going to join the organization and who will depart, in other words, hiring and firing, and changing these rules as things become necessary. So not telling people what to do, but rather setting up a system in which people can operate with some degree of autonomy. Again, my favorite example to illustrate this notion of what we call type 2 authority is what I've mentioned before, Wikipedia. Some of you may know, but you may not, that the founder of Wikipedia, Jimmy Wales, got the idea of producing a decentralized peer-to-peer encyclopedia from reading Hayek. And according to our good friend Mark Thornton, who had Jimmy Wales as a master's student in a course at Auburn University, Jimmy Wales got the idea of Hayekian spontaneous order from Mark. Okay? So one of our own Mises Institute senior faculty may be responsible for, at least indirectly, for Wikipedia. But Jimmy Wales says, after reading Hayek, I realized that you could get a much higher quality encyclopedia, with a much broader scope of coverage, many more topics. You could get mistakes corrected more quickly if we did this. If we relied on user-generated, peer-produced content rather than have a senior editor who assigns all the topics to writers who then write the topics, write the entries for the encyclopedia, and so forth. And I don't think anybody disputes. Almost nobody disputes that Wikipedia really is a much superior product to the Encyclopedia Britannica or whatever. Okay, but again, one of the why does Wikipedia work as well as it does? Well, there are two things that make Wikipedia work well. One is the look and feel. Right, one of the things that we like about going to Wikipedia on our phone or on a PC is that everything is laid out and formatted in an easy to read and consistent way. You've got the different sections of the article broken down. You've got the little tabs at the top where you can see the edit history. You can see disputes and have a chat about the article. You can participate in the revision process. You can track who's doing the revisions. There are procedures for resolving disputes. Now, none of this works perfectly. As you know, there's probably been a lot of disputes recently about, particular ideologies rearing their ugly heads on Wikipedia, and how the Wikipedia editors are biased, and prefer socialism or whatever about capitalism. That's all true. But the point is, Jimmy Wales put together a system. He wrote the code, right, for how an online user-generated encyclopedia would be constructed, how it could be revised. That's what makes it work, is the code and the procedures established by Jimmy Wales and his co-founders And, even now there's a Wikimedia Foundation, which exercises control over Wikipedia. If the basic underlying code were to be revised, if the way articles look were to be revised, if the way articles can be edited were to be revised, that would all have to be approved by the heads of the Wikimedia Foundation. Jimmy Wales being one of them. Okay, so Wikipedia works precisely because it was designed, right? Not that Jimmy Wales wrote the entries for every Wikipedia article, but he designed the system that allowed for Wikipedia articles to be created and improved and so forth by the crowd. That's a perfect example of the kind of authority that we have in mind. Okay. Okay, so let me just wrap it up because I want to get to the Q&A here. So most of the examples that are provided of companies that supposedly are radically decentralized and don't really have bosses, if you look at them more closely, they really do have bosses, right? Either they have bosses of the Jimmy Wales type that we just described, or they have bosses like Tony Hsieh at Zappos, or like the key decision makers at Valve, that really did exercise a lot of the old-fashioned command and control authority, but again, doing it in a not very transparent and often dysfunctional way. Decentralized organization is sometimes better than more centralized organization, but not always. Depends on the circumstances. And good solid management, skilled bosses, if you like, are needed today more than ever. But the role of the boss most of the time is different. Again, it's not so much command and control, but rather it's establishing procedures and revising these procedures when necessary. And I think there's a lot of scope for more explicit application of the basic principles of praxeology, the core concepts of Austrian economics, to understanding how hierarchies work and how to make hierarchies work better. And I think there really hasn't been a lot of development of that within the Austrian literature, partly because of the impression, which I think is a mistaken impression, that Austrian economics and hierarchy and design are somehow fundamentally in tension. I claim that they are not. You can get all the gory details when this book, again called Why Managers Matter, comes out sometime later this year. You can also look at the article by Bylin, Packard, and myself on Austrian economics and design theory in the Journal of Business Venture Design for more details as well. Okay, so let me stop now and open it up to some questions. Again, I apologize. Some of you have commented that there appears to be some kind of a sound issue, and I'm sure it's something on my end, some problem with either hardware or software. I haven't had this problem before, so I don't know if it's specific to the Discord platform. I'll certainly investigate it when we get off, and hopefully that can be fixed in post-production. So when your friends and family listen to this recording later, and I'm sure you'll recommend that they do so, it will all sound wonderful.
All right, we have a few questions here for you. First question here comes from Dabchik. And he asks, in the broad field of Austrian economics, entrepreneurship and capital theory seem to be partially disparate subfields. Famously, in evenly rotating economy, the entrepreneur disappears while interest returns remain. Do you see some sort of synthesis of these threads in the near future, or are they essentially different?
Oh, yeah, I definitely see them as part of the same basic idea, not as distinct. I think that entrepreneurship theory is basically part of production, right? The way I teach entrepreneurship theory is to start with our understanding of how goods and services get produced, right, using capital. So I think Austrian capital theory, Austrian production theory, and Austrian entrepreneurship theory are all different sides of the same coin. I don't know, can you have three sides of a coin? Anyway, you get the point. It's true that in the evenly rotating economy, there is no entrepreneurship because by definition, the evenly rotating economy abstracts away from uncertainty. You do have capital and you do have production in the ERE. You have no entrepreneurship because the role of the entrepreneurship is to produce, to arrange the factors of production, to arrange capital assets precisely under conditions of uncertainty. Again, the ERE is not sort of, the culmination of Austrian theory. The ERE is just a tool, a mental tool that's used for a few very narrow and specific purposes, like distinguishing interest income from pure entrepreneurial profit. There are a few things that the ERE is useful for, but the ERE is not meant to describe, how a market ideally works, from an Austrian perspective.
Next question here comes from Dan Man. He asks, do cooperatives or democratically run firms cause problems for monetary calculation? If so, what would happen if an economy consisted entirely of cooperatives, not by mandate, but by voluntary association?
Yeah, that's a great question. So let me answer it in a sort of a roundabout way. I mean, I have a lot of friends, colleagues, in my field who are, very critical of capitalism, and they think capitalism has caused all these, bad for the economy, the planet, yada yada yada, and they favor, they say, well, we ought to have a system of worker-owned cooperatives instead. And we need a whole new, radically different kind of economy to make that work. I mean, one thing I like to point out is, we already have worker-owned cooperatives, and we have some producer-owned cooperatives and some consumer-owned cooperatives in our economy today. We have quite a few of them in the U.S., but they, and in fact, several parts of the legal and tax code give a lot of preferential treatment to cooperatives. Cooperatives are immune from antitrust law in the U.S. They get favorable tax treatment. We ought to see even more of them than we do. Where we see them is in a few narrow specialized industries, right? We see some producer cooperatives in agriculture. There's some grocery cooperatives and small retail cooperatives owned by consumers. There are very few worker-owned co-ops that are actually successful, right? Again, even though there are legal advantages for that. The reason is because that mode of organization doesn't work well, right? Precisely because, let me put it this way, the great advantage of the investor-owned company is that the people who are ultimately responsible for making decisions, the owners, shareholders in a corporation, or partners in a partnership, or a proprietor in a proprietorship, right? They have some distance from the other aspects of how the company is run, right? In a worker-owned co-op, they're not very efficient because the people making the decisions about what the company should do are also the people who earn a living from working for the company. Okay, but one of the great things about an investor-owned firm is that the investors, they may have some disagreements, but the investors basically agree on the core purpose of the company, which is to make them money, right? And when they disagree with each other, if they have really fundamental disagreements, it's very easy for some owners to exit. The way you exit is you just sell your shares, right? And you're out. You don't have any emotional connection, any personal connection. You can sort of disassociate yourself and make sort of hard-no decisions about what's best for the organization in your capacity as an owner. In a worker-owned firm, you can't do that because, right, the workers are heterogeneous. They have different objectives. They're, younger workers who would be willing to earn a lower wage now in exchange for the firm investing, keeping more retained earnings and investing that and growing the company because those younger workers have a longer time horizon. You have older workers who are close to retirement who want higher wages now, even if it means less investment and less growth for the organization later. How do those workers resolve that disagreement? Walter Block gave the example earlier about, the praxeologist supposedly fighting it out. Well, that's all those workers can do in a co-op is fight. Right? And there's no way to resolve that problem, and it's very difficult for either the younger workers or the older workers to exit because that means the loss of their livelihood. Right? If I am a part owner of a company, a lot of people say, oh, I really love, the XYZ burger joint. I eat there 3 times a week. It's my favorite burgers. I should buy stock in that company. No, you should not do that. Right? Because that will make it harder for you to make rational, informed decisions as a stockholder, as a part owner, if you also just like eating the stuff. Right? So co-ops, to answer your question, an economy that has cooperatives can still engage in economic calculation, right? So entrepreneurs can still engage in calculation as long as the co-op is competing against other co-ops and other investor-owned firms, startups, and all kinds of other organizations in the market. It'll be very difficult to manage that firm effectively from the inside, but there's nothing violating Mises' argument that economic calculation under socialism is impossible, does not rule out an economy that features cooperatives as long as they're private and voluntary.
Next question here comes from Thunder. And he asks, do you think Austrian theory could or should also expand into doing an Austrian analysis of public choice economics?
Um, yeah, I mean, short answer, yeah, I mean, it already has, right? I mean, public choice economics, if by that we mean the application of economic reasoning to explain non-market decision making. I mean, that wasn't invented by Buchanan and Tullock or by Mansur Olson or any of those folks. I mean, that's been part of economics for a long time, and certainly, Mises' book on socialism, Mises' his short book on bureaucracy, some of Rothbard's analysis in Power and Market, I think is essentially doing that same thing. I mean, if you mean, is there some specific theorem or some specific finding that was recently came out of the self-identified public choice school? Should Austrians do a critique or analysis of it? I mean, that would just depend on the circumstances. But yeah, certainly Austrian economics can be applied to non-market and has been applied to non-market decision making. That hasn't been the main focus of Austrian economics, but there certainly has been some work in that area.
Last question here comes from Tree Hugging, and he asks, is there one criterion that makes a firm public rather than private? For example, a business could have an IP protected product, have financial support from the CIA. Would such a firm still be private?
Yeah, I mean, that's a great question, but I think it's one for which it's impossible to give a sort of a priori answer. I don't think that's a question we can answer with sort of praxeological certainty. Look, as long as government intervention exists, all of us, all individuals, all companies, we're all entangled for better or worse with the state. I should say the state, has stuck its tentacles into our affairs in ways that it's almost impossible sort of to tease out. I mean, look, there may be some cases. I think this is kind of a judgment call where we have to go on sort of a case by case basis. I mean, I would say, Raytheon or Lockheed Martin, a company that is primarily a defense contractor who has who's producing military technology for one client, the U.S. government, or maybe other governments as well. I mean, that is, even if it's a private company, we would say that that is a company that is certainly would not exist on the free market, right? And that company has benefited a lot from intervention by the state. However, would you say, is Lockheed Martin like literally part of the state? I mean, again, if the criteria is to what extent does this firm benefit from the existence of the state or certain state actions? Well, I mean, for Lockheed Martin and Raytheon, they benefit a lot. Goldman Sachs benefits a lot. What about Amazon? Well, I mean, it benefits some. People like Kevin Carson talk about subsidized roads. I mean, but I mean, every organization is benefiting to some extent from subsidized electricity and so forth, subsidized transportation, but also being penalized quite a lot through regulation and through government intervention in ways that are it's sort of impossible to add those up. So therefore, the criterion that I use is one of ownership, right? So I tend to think that any firm that is literally privately owned, meaning it's not a state-owned enterprise, is part of the market, is essentially a private company, even if it benefits a lot from intervention by the state, just as other private companies are harmed quite a lot by intervention from the state. I would say that an entity that is legally publicly owned, the Chicago Public School District, they've been in the news lately because the head of the Chicago Teachers Organization, it's the only major teachers organization in the U.S., was voted to shut down the schools. That is not a private organization, even though they engage in some market activity. I assume that at the head of the Chicago Public Teachers, whatever it is, Teachers Union, Teachers Association, they have pens and paper that they bought at Office Depot or Staples, right? So they bought some stuff on the market. They have private goods and services that they use. They have automobiles that they purchased and used to drive their members around. So that's a state-owned entity. It does participate in the market, but again, you can make a clean delineation there in terms of ownership. But in terms of who benefits, I think that's way too messy. You might listen to my lecture on the economics of big tech, including one I gave at the Mises Supporters Summit just a few months ago. I don't think that Twitter and Facebook and Amazon, no matter how much I dislike some of their moderation policies, I do not think they are part of the state, and I don't think they should be, regulated or legally considered to be state entities. They're private companies that are doing a lot of stuff that I don't like, that I personally don't like, and they are certainly taking advantage of the state where they can, but just about every other company does the same thing.
All right. Well, in closing, before we let you go here, do you have anything you want to let everyone here know about, or any place where people can follow you at?
Oh yeah, thank you. You can follow me on social media or find my website. It's just my name with my middle initial, Peter G. Klein, KLEIN.com. That takes you to my university website. You can find a lot of my stuff at the Mises Institute, Mises.org. You can follow me on social media at Peter G. Klein. Would love to continue this conversation further, and look forward to the rest of this event as well.